Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is October 9, 2024. This is the Kickstart video where I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective. So let's get started. Let's look at the 4-hour chart of the euro versus US dollar. In trading yesterday, we highlighted this 50% midpoint of the move up from the low price that we saw at the beginning of August to the high price that we saw in September. The 50% retracement came in at 1.09954, and the price moved just a little bit above that level and also ahead of this swing area through here, which had a number of different swing lows and swing highs going back in time to this area right through here. You can see how that was developed, and we fell below that level last Friday. And continued and stayed below that level since that time. So the 50% retracement, this area remains a key resistance on the top side. On the downside, we have another key level that is proving to be hard to break. That level includes this swing area right through here, which became a nice little floor through here. And in trading here today, the price low came right down to the high of that swing area at 1.094. Looks like 49. The 61.8% retracement comes at 1.0944, and the low of that swing area comes at 1.0941. Below that is the rising 100-day moving average at 1.09323. So this area is a key target on the downside that we need to get to and through to increase the bearish bias. If we do get below that level, it opens the door for further selling momentum. So be aware, be prepared. But for now, that level is holding support. This level is holding resistance. And we'll see how this is resolved going forward. Let's take a look at the dollar versus yen next, and then we'll look at the 4-hour chart once again. And if we look at this price action this week, the market low came right down to the high of this swing area right through here. This was a ceiling with a number of different swing highs right around the 147.33 level. And the low price came in around, I think, the 34 level yesterday and rotated back to the upside. We're back above the 38.2% retracement level at 148.116 and extends to new highs, as you can see. And I like the fact that the price moved above that level. And then, although we see a little dip below the level right through here, we've reestablished support against that level and pushed to the upside. We do have the high price from yesterday to contend with. Also, the high price going back to this day in August, which came in at 149.356. And that is our next target on the top side. Targets on the top side. If we get above those levels, we look toward the 50% retracement. And you see these two moving averages up here. That's both the 100 and 200-day moving averages. Both of those moving averages are coming together, looking to converge. That would certainly be a key target on increased momentum and also a troublesome area where I would expect that sellers would look to lean again. So this whole area right through here would be a key resistance going forward for the dollar versus yen. But we're still far away from that level. Right now, we're going to be watching the 38.2% retracement as close risk. Stay above that level. It gives the buyers more control, or keeps the buyers in control. Let's take a look at the sterling versus US dollar to finish things off. And as you can see, the high price that we saw in trading yesterday moved up to the low of this swing area through here. That area came in 1.31145 and found willing sellers against that level. And trading here today, we moved back down toward the 50% retracement. We did break the low for the week by a few pips here, but we are seeing a rotation back to the upside. So there is some apprehension in moving below the 50% retracement, at least for now. If we do get below that level, it opens the door further downside with the low price here, and then the 61.8% retracement, 100-day moving average as the next key targets on the downside. If we again do break below the 50% retracement level, it can be a sticky point for traders from a technical perspective, so be aware, be prepared. If we start to move back into this swing area and back above the 38.2% retracement, all bets are off for the downside, and we could expect a further probe toward the 200 bar moving average on the 4-hour chart going forward. Finally, let's take a look at the New Zealand versus US dollar in a special. Why? Because the Reserve Bank of New Zealand did cut rates by 50 basis points, and in the process, we fell below this cluster of key technical levels. The 100-day moving average is the highest point. The 50% retracement is a middle point, and the 200-day moving average is the lower point. After the cut, the price fell below all those levels and then rebounded back into this yellow area, but did find resistance sellers against 50% retracement before rotating back to the downside. Since then, we've been stayed below the 200-day moving average and moved down toward our next modest target here at 0.60627. A better target would be the 61.8% retracement at 0.60509. That's of this move up from the August low to the September high. But what is also key is staying below the 200-day moving average. If the price were to move back above the 200-day moving average, all bets are off, as I would guess that the market would be disappointed on the fail break below that moving average. So that's my look at 3 of the major currency pairs and a bonus one with the New Zealand versus US dollar. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.